Hey traders, it's Forex James with another video for you. And in this video, I wanted to share with you the 4 types of trades that you need to know about. So I've categorized the types of trades that traders make in the Forex market into these 4 categories. Okay, no matter what system you're using, the different technical analysis methods, the different indicators, or you may be even a fundamental trader. Regardless of the reasons that got you into the trade, I have found that there are only 4 types of trades. So without further ado, let's go through them one by one. Okay, I would like to start off by mentioning that there are only 2 phases in the market. Okay, one is trend and the other one is range. So let's start off with the trending phase of the market. Okay, the first type of trade that you can be making in a trending market is a trend trade, of course. What do I mean by that? A trend pullback trade, to be exact. Okay? As we already know, the definition of an uptrend is higher highs and higher lows. Okay? In a trending market, the best spot to get into a market is during a pullback. Okay, so number 1 is a trend pullback strategy. Let's take a look at a few trend pullback strategies that a lot of traders are using. Okay, so here's a chart of the dollar yen. To define a trend, many people have different ways of doing so. Okay, some of them may use a moving average, a 200 moving average, for example. Okay, this is a nice example here. An uptrend that's not too strong, okay, that's not too steep, and it goes quite a long way. So one of the favorite tools that traders use is the Fibonacci retracement. You simply start from the beginning of the swing to the spot where it made a pullback. Okay, as you can see here, it pulled back all the way to the 61.8, the magic Fibonacci number. You may also, there's no right or wrong way to pull your swing from. Some of you may prefer by pulling your fib from this starting point, the lower point here. And what we have here, if we had pulled the swing from this area instead of this swing, is a pullback to the 38.2. So as you can already see, there is some subjectivity with this method of using Fibonacci. Okay, others who don't use fibs may simply look at this move and use the 200 as the median price, and notice that when it comes back to touch it, it bounces off. Okay, one time here, another time here. With a trend pullback type of trade, the challenge is always to find out when the exact turn will happen. Okay, if you're a price action trader like myself, who uses mostly supply and demand levels or support and resistance, you may be wondering which of these levels will actually be tested. Okay, that is always the challenge. As we already know, prior resistance has a good chance of becoming future support. Okay, but as you can see, these are all levels of resistance that I've drawn. Okay, so it's our job to actually gauge where the market will most likely turn to the upside again. Okay, so this is what I've shown you. It's an example of a trend pullback trade. Number two, of course, it would be the counter trend. So instead of these points, you're actually trying to make short trades here. Another one here. Another one here. Against the trend. There's always pips to be made here, up and down. Okay? And the more advanced traders may choose to also take the opposite side of the trend. And one of a strategy that a lot of people use is the divergence. As you can see here, this is considered to be a valid divergence with the indicator making pretty much equal high and price making higher highs. Okay, so one may take a counter trend trade towards the median. Here's another one. Price continues to make higher highs. Indicator shows lower highs. Okay. Here's a bigger one. A new swing high. Indicator makes a lower high. In my opinion, this is more risky than taking a trend trade as you're going against the tide. Okay, so these two are the examples of the types of trades that you can make in a trending market. Let's move on to the ranging market. As you may already know, the market ranges most of the time. After a period of trend, usually falls into a range. Okay, there you go, another range. So number three would simply be a range trade. One would buy at the lows and sell at the highs. Okay, it's not a counter trend trade anymore if you're selling here because you're in a range. Okay, as opposed in this scenario here, if you were to take a sell in an uptrend. Okay, so let's take a look at the charts. One of the most favorite indicators that traders use is the stochastics. So it gives you a signal when price comes down from above 80 and crosses below 80 to sell. And the opposite goes for a buy signal. So remember guys, if you simply take these signals blindly, you will lose money because the stochastics work best in the ranging market. So let's first find a ranging market. Okay, here's one. Big downtrend. Okay, after a trend, what happens? The range forms. There you go. So sell signal here. Indicators always lag, by the way. And then there's a buy signal here. This may turn out to be a loss. If you had placed your stop loss beyond this low, okay. Another sell signal here. There's plenty of pips to be made, by the way. This is a daily chart. And there's another buy signal here. Not all of them will be winners. So we just have to make sure that when we win, we make more pips than the losers. Here's another long period of range. You could simply rely on the stochastics when the market is ranging. I've set my stops to these settings here, 833. The default is 533. Okay, you'll get more signals, but some of them may be just noise. Okay, I personally don't use any indicator, so all I'm counting on is that price bouncing off these supply zone and the demand zone in the bottom. Okay, so if a stochastics gave me a sell signal here, I wouldn't take it simply because it's way too far from the supply zone. So this is an example of a range play. Last but not least, the range will become a trend again. Okay, and that's when some of you guys may choose to stand aside during this consolidation phase and simply wait for a breakout. Okay, the rule of the thumb is the longer the range, the bigger the breakout. Okay, so you may simply choose to stand aside when price is going sideways and just simply wait for a continuation of price or a reversal. Okay, in this case, it's a downtrend. So this is a continuation. And a common practice that traders do is placing sell stop orders. This changes to red below the range and buy stop orders above the highs. If you want to be on the safe side, you can place it above this high to make sure that price really breaks out of the range and you want to hop on the next trade. Okay guys, so to recap, pullback trade, which is when you will want to enter on a retracement. Number 2 is a counter trend trade, which is trading against the trend. Number 3 is a range trade. You are simply bouncing off the floors and ceilings when price is going sideways. And lastly, it's a breakout trade. Okay, in my own findings, all your strategies and your reasons for entries come down to these 4 types of trades. Now with this information, I have a tip for you guys to further improve your trading by creating your own journal of trades. Okay, so next to your entry, let's say you're long the EU. Okay, you're long. Write down the type of trade that you're taking. Okay, let's say it's a range trade, or you can just simply write range. Do these over a series of trades. Okay, range, breakout, counter trend, or trends, and you'll be surprised at the statistics that you'll find. Because these different types of trades each holds different success rates. Okay, meaning some are riskier than others and some are safer. Therefore, if you were to keep a journal over a series of trades, you'll then find out which 1 or 2 out of these 4 work best for you. I can tell you right off the bat that trading counter trend trades are riskier. Okay, so thanks for watching guys. Hope you're able to find some useful information here. Leave me a comment as usual. Let me know which type of these trades you usually take. And I'd like to wish you the best of luck in your trading. Don't forget to like and subscribe to my channel. Cheers guys. Yeah.